I'm Owen Bigland. This is the Inside Edge video blog. Okay, just last week we had our annual Macdonald Realty Conference. Every year we have this. This year it was held online as opposed to having it at the Trade and Convention Center, or Vancouver Convention Center like we usually do. So it's a round table. They bring in a lot of different topics, but the key topic this year was, of course, COVID-19 and the state of the current Vancouver Lower Mainland real estate market, and how, of course, reading in the paper and seeing in the news, not just in Vancouver, but the entire North American real estate market is very robust right now. Inventory is muted, somewhat low, especially for the good quality detached homes or good quality condos like they always are. Prices have been up. September was an all-time record month. August was strong. July. So real estate is a strong market. It's a seller's market, which caught a lot of people, not everybody, which I'm going to go to in a minute here, caught a lot of people off guard. How can we be in a pandemic with millions of people unemployed and on government assistance, and yet the real estate market, and for that matter, the stock market, is at or near all-time highs? So they had a bunch of economists, they had a realtor roundtable. So I thought I'd go through some of the reasons here that real estate has been so strong. And you can transplant this to a lot of US cities, same thing. And some of them, if you go back and watch my blogs back from late March, April, May, I did many blogs on this, on saying, just be patient here. I'm not seeing a lot of panic here. Now, I didn't foresee that the market would bounce this strong. And especially I didn't see that in the stock market. But I was saying, if you go back and watch my blogs in that time, I was saying, be patient, don't panic, and let's wait and see. So the first thing, I'm going to give you 4 reasons here from this conference, and I'll just give you my opinions on them as well. Many of them, these I've already talked about since back last early April. If you go back and watch my earlier blogs on COVID-19 and what's going on with the real estate market, as well as the stock market. But one of the main ones is that, the world is awash in liquidity right now. And people are putting their money into safe havens, tangible assets like real estate. But the big one that they talked about at our conference here is it turns out that, 80% of the job losses from COVID occurred at the bottom end of the income scale, meaning that the bulk of the crisis has fallen on those who were least likely to buy real estate. Well, does this sound familiar? I was back telling you guys back in early April, I was calling it the blast zone. And at that time, Vancouver Sun, Globe and Mail, Bloomberg, which I got into that big dust up with on that article that they put out in May, calling for the day of reckoning coming in Vancouver real estate. Sell everything now while the getting's good. Everyone's going to be out of a job. Everyone's going to be forfeiting and defaulting on their mortgages. We're all going to die. We're going to be in this pandemic for years. The city of Vancouver's broke, but hey, we are the luxury capital of Canada. I took a dig at that article and got a lot of pushback on it. But I had talked then, and I think I was one of the first, as far as I know, maybe you guys can correct me on this, to talk about this exact same thing. I talked about it, calling it the blast zone. The blast zone for COVID-19 was, majority of it was in the hospitality industry. It was waiters and waitresses and bartenders in the restaurant and bars. It was in the travel industry, airlines, of course, hotels, those kind of things. And I had said back then that, I feel for these people, and I still do. Many of them are still out of work. But they were never real estate buyers in the Lower Mainland, and especially not in Vancouver. They were renters, and even the renters, I went on to say, really weren't affected in Vancouver at all, or even the surrounding suburbs like Richmond or Burnaby. Because my typical tenant now is paying $2,200 a month for a 1-bedroom. They were young tech workers, lawyers. They were not affected by the COVID at all. And I had said that, and again, got a lot of pushback. They said, just wait, just wait. But it's turned out not to be the case. These people were pretty insulated. And the other reason I know is I'm always working with a lot of buyers. And I had many buyers that I was working with back in April and May. I had many that were in my queue. I can only take on so many at a time. And all of them, I touched base with all of them, none of them wanted to give up their search. As a matter of fact, most of them were even more anxious to get into the housing market because they thought, hey, with this COVID, there's some panic selling, which there was, and I blogged about that. We can get a better deal. And that was the case. I mean, I managed to snag some very good deals for some of my investor clients as well as my principal residence buyers on condos, townhomes, and detached homes. A few slipped through the cracks. I did a few blogs back in April and May. There were some absolute fire sales that I sure wish I had the buyer for. I talked about a condo in Mount Pleasant. Those units now are selling for $70K above what this unit sold back for in April. And some detached homes on the east side of Vancouver that, my God, I hope these sellers don't look at what things are selling at, because they're probably up $200K from some of these selling prices back in March, April, and early May. So the blast zone, unfortunately, was, as this points out now and what's been in the media now, turned out they weren't buyers, but I was telling you guys that back in March and April anyways. You know, when you're buying a typical one-bedroom in downtown Vancouver, you're earning six figures all day, and you need $100,000 or $150,000 down payment. That's for a simple one-bedroom. Buying a townhouse or a detached home, these people just, unfortunately, we're not in that blast zone. Not to discount the people that are. I feel for them, which I'm going to get to in a minute. The second thing is the changing consumer preferences. So I've done blogs on this. It's in the news. You know, people there's been a flight now to the detached market, away from condos, and for a number of reasons. COVID is one. The increased crime and the street crime activity in downtown Vancouver because of COVID. People are afraid to ride the elevators and that kind of thing. The strata insurance issues. This with COVID is combined for a flight to the detached market. And that's the case. I mean, I've had some record-setting prices in East Vancouver on some of my listings. I've had sales in Richmond. I just had a sale out in Delta representing the buyer on a detached home. They are setting record prices. I mean, my home that we bought in Delta for my clients, we were in 3 bidding wars before we were able to get this one. And it is an all-time record prices out there. But what I would say on this, though, the media will say that, and I've heard many people say, you know, everyone just wants to buy a detached house. Well, that would be great if you had a spare $1.5 million. So it's not that easy. And what I want to tell people, and I've done a few blogs about this earlier this year, do not count out the downtown Vancouver condo market. Yes, we're going through some darker clouds right now with the insurance crisis, which I've done many blogs on, that I think the cavalry is on the way and the worst is over. And I'll do more blogs later this fall on it. But of course, the streets are dirtier, there's more homelessness, there's more crime. I've done blogs on that. Again, I think we will get through this. You know, the other thing, of course, is just the affordability. Yes, if you ask someone living in Yaletown right now in a one-bedroom condo, would you like to buy a detached house? Of course they would. But they don't have 1.5 or 1.6 for East Van. They don't have 1.4 for Richmond. They don't have even the one I just sold in Delta was an older home, 43 years old, at $1.4 million. That's what you're looking at. You might be able to get an old bungalow on Knight Street for 1.3, but it's going to have 1 bathroom. So it's not as easy as some people portray in the media that everyone's going to be moving into detached homes. It's not the case. First off, there's very little inventory for detached, even if you go out to the Fraser Valley. And even in places I'm getting ready to list an older home, a 60-year-old home in Surrey, that basically a teardown home for almost $1.1 million. Pretty big jump going from a condo to $1.5 million. So not quite as easy as people think. The other trend, though, of course, is this work from home. And I've done many blogs on this. And again, mark your calendar here. Watch this video down the road. Do not count out the downtown office market. We have got several hundred million square feet of office space coming online in the next few years. We've got another couple hundred million square feet coming on 3 years down the road from there. We have got a major office boom going here. Most of that, not all of it, but a good portion of it is already accounted for from tech companies like Amazon and SAP, Microsoft, Salesforce. Early innings of an office boom. Do not count this out. It's probably going to be another year to 18 months before the office market recovers, probably just in time for this new office supply to come online, because it's still a little ways out yet on a lot of it. But do not count it out. I've read many articles here in the Wall Street Journal recently, The Economist, about the New York market. You've always got these guys that are, counting out Manhattan. It's done. It's never going to be the same. Off topic, I don't know if you guys saw 60 Minutes a few weeks ago. They had an interview there with Jerry Seinfeld. There was a guy on, there was a blog post from some guy that Jerry Seinfeld called a putz, and I agree, he was a putz, saying that New York is never going to be the same. Offices are going to vacate. Nobody's going to want to live in Manhattan. I saw the same thing right after 9/11. Jerry Seinfeld saw it, being a born and bred New Yorker, stepped in with his own rebuttal, and it got a lot of media attention. But essentially, Jerry put the guy in his place, and I was glad to see it. New York is not going anywhere. It is still one of the most, and will always be one of the most desirable cities in the world. It'll still always be the financial capital of the world. If anything, I would look at the real estate market in Manhattan right now, or the office estate market, as a good buying opportunity. These things will be temporary. We're going to get a vaccine probably sooner than most people think. Once that happens, it's a game changer. It'll take some time. Confidence will come back, just like it will for downtown Vancouver. Eventually, the COVID will pass. The economy will start going again. We'll start cleaning up the streets. And there's already a lot of pressure on Kennedy Stewart to start, Mayor Stewart to start doing some things, and eventually that will come to fruition. But the other thing, these employers, they are very generous allowing people to work from home, and it's good that they are until we get a vaccine. But I can assure you that these employers eventually, once everything is settled with COVID, are going to be expecting these workers to be coming back into the office for a number of reasons. And from what I read, a lot of these tech workers miss that camaraderie, the collaboration they have in the office. They get more work done. So I saw this exact same thing in 9/11 in New York. Everyone counted it out. Within 2 years, it was back thriving again. And I think you'll see the same thing. The work from home is going to be temporary. And I do not lose count of the desirability of living in and working in downtown Vancouver. No commute times, walk to work, walk to the bar, walk to entertainment. It's a lifestyle. And that ties me into the flight to quality. And this was talked about a lot here. And this is a bit of a wild card, this one. But I think this has got legs. The flight to quality is that, the pandemic, we're starting to see an exodus from high income, low quality lifestyles to a more high quality style of life. And I think that's going to be true, tying it in from the work from home, technology now where you don't have to be in the office all the time, or you can work remotely, and more people are going to be doing that for sure. I'm not saying that everyone's going to go back to an office in a couple of years. There will be more working from home and working remotely. But you're going to see that from less desirable lifestyle cities to cities like Vancouver. So when it comes to Vancouver, we're top of the game here. You're not going to get any better than Vancouver as far as quality of life, lifestyle, mountains, ocean, mild winters, world-class restaurants, everything at your doorstep in this city. Now, we pay for it with our high real estate prices, and that's the proof. We've got the highest real estate prices in Canada by far, and some of the most expensive in North America. But the Economist was talking about this down the road, that with technology and everything else, Vancouver is not going to lose its desirability. Best place to live in Canada. I've often talked about too, every year I sell 2 or 3 homes, maybe sometimes more. This year I think I've already had about 4 sales. Several buyers from Alberta and several buyers from Ontario and Quebec. That this is where they want to live. When they retire, they sell the home out in Ontario and then buy a condo down in Yaletown or Cole Harbour and live the West Coast lifestyle. Sure, some people go the other way, move east to less expensive areas to downsize, but there's more coming in than there is going out. If you've got the money though, that's the secret. Selling that $1.5 million home in Yorkville or $2 million home in Yorkville and buying a $1.5 million condo in Cole Harbour. I think that trend will continue here for lifestyle cities like Vancouver. And that's what we've always had going for us here. Pretty tough to beat the lifestyle we get in Vancouver, the downtown lifestyle, or even living in Kitts or living in an area like Renfrew or Woodlands area, where you're a 5-10 minute drive into downtown. The other thing is, the final thing was stable is sexy, and that had to do more with Canada in general. Canada is considered a stable country to live in. Politically stable, our currency, our economy, clean drinking water, fresh air. Climate change was also brought up, how these northern countries might be a little more favorable as things start to warm up down south. So these are all things that have buoyed not only the Vancouver market, but the entire North American real estate market, but also the stock market as well. And I want to just put one more point here. A lot of people were caught off guard by this. They just don't understand, how is this possible that the real estate market can be so strong? And how is the S&P and the Dow at or near all-time highs? It doesn't make any sense. We still got another shoe to drop, some people would tell you. But if you really look at it, again, the breadcrumbs were all there. And a lot of the people I was listening to, as far as the stock market goes, and I was doing a lot of stuff on Twitter back in March, April, and May, because I took all my listings off the market for 5 weeks, which turned out to be the right move. Listened to Dr. Bonnie Henry. It was the right move for my sellers for sure. That was at peak COVID. Everyone was quarantining. But I knew we were back off to the races when I put those listings back out in the first week in May, and I was blowing them out immediately, getting offers on them. But, the thing that the people need to realize here is that, the pandemic was really affecting those people, as I said, in that blast zone. They were the ones, they were never real estate buyers to begin with. And it's turned out to, to come fruition. But as far as the stock market goes, Jim Cramer on CNBC, who I was listening to quite a bit back in March and April, he was telling people as well to stay the course, look for buying opportunities, which I took his advice on. Because people are confused the difference between Main Street and small mom and pop individually owned businesses and the large corporations you're investing in the stock market. You're not investing in Joe's Hardware or Frank's Diner when you're buying stocks. You're investing in McDonald's or Chipotle or Walmart or Target or Home Depot or Costco. And those companies have thrived. And the guys I was listening to were laying that plan out. And I was buying the whole way up. But a lot of people just still don't get it. And I feel for these small business owners. I do. I've done several blogs on this. I'm hoping that we can get out of this and get a vaccine and get back to normal here sooner as opposed to later. And I don't think I'm a fan of another shutdown. I think we should be social distancing. And if you're in that danger zone, you're older, you've got preconditions, health conditions, you should stay inside, especially coming into the fall and winter cold season. But you're not investing in Joe's Hardware. You're investing in Home Depot. And if anything, as we've seen, it's boosted those up even higher. And that's the final thing I'll just leave it with, my dig that I always like to do. A lot of this I put on the mainstream media, the CNNs of the world. CNN should be barred. They should remove that station off the airwaves. You should defund it. It's all panic. It's all doom and gloom. And unfortunately, a lot of people listen to them back in April and May and March. We're all going to die. Everyone's going to be out of a job. If you own real estate or you own stocks, sell them. That's what they were telling you to do. Get whatever you can for them. Because that's what sells. The doom and gloom narrative and the fear is what sells and keeps viewers in there. The stay the course and don't panic, that's boring stuff. And it's the same thing with Vancouver real estate. I was telling people just to stay the course back this spring. Don't panic here. Let's wait and see. It's way too early. And I was seeing that from my clients, my buyer clients. None of them just called me and said, hey, we don't want to go through with our home search now. If anything, it spurred them on even more, which in hindsight now, which again, I never thought we would have the market that we've got now. I knew it would rebound, and I knew it would probably maybe tread water or stay pretty strong, but I didn't think we'd have this type of bounce. But some of the units I was selling back in May and June and homes are already looking like very good buys right now. But that's the problem with people listening to a lot of the mainstream media. Instead, get the other alternative to this. which is what I was listening to and what I was tweeting out to you guys as well. So we'll see where this market goes. You know, eventually, by the way, this market will slow. A hot market like this won't last forever. You know, I'm noticing it in the condo market a bit right now already. The detached market is just off the hook. But for condos right now, I've often said there are two worlds of condos. That's the thing that everyone needs to remember, that only a realtor like myself, very few, only insiders really know. There's two worlds of condos. There's the good quality stuff that I'm buying, getting in my clients into. I've only got maybe 15 or 20 real preferred stratas that I like downtown. There's some other good ones that are kind of tier 2 that are still good, but 50-60% of it I probably wouldn't touch with a 10-foot pole. That market is still pretty solid. As a matter of fact, some of them are getting into multiple offers, and if it's priced right, it'll sell quick. But the dogs that I often talk about, maybe a bad strata, issues coming up, levies, bad location, hugging up on a bridge, noisy, whatever. There's a million reasons why it's a less than ideal home. Those are starting to languish a little bit more. The buyers here are being a little more patient on those for sure. And even on some of the better ones, they're being a little more patient as well. So eventually this market, this hot market, will turn. Probably start with the condos and then move on to the detached. But for right now, it's strong. And with 2% interest rates, don't try and time a market. As I've said hundreds of times here, if you're pre-approved and can comfortably afford the house, buy it, keep it, and hold it, and you're going to do fantastic. I'm Owen Bigland. As always, thanks for watching. I'll see you next week.